Hey everybody, let's see if I can do a quick video. Yep, so this particular WTI oil and Brent oil clip is one that we did, recorded from Acapulco at the Dollar Vigilante speaking slot on the 22nd, the 12th of the 2nd, that's 12th of February 2020. So that is the correct date when this speaking event up top here was occurring. You can confirm it with the event organizers and the ticket. That was the last public date that I asserted that you would have a major sell-off in oil that would surprise people. I also said the possibility, not the probability, the possibility that people have underpriced for such low oil and even lower levels of oil, including a single-digit oil, is high. Just because the nature of this fall will be violent and big, and it'll catch the market by surprise, and then suddenly everybody will start thinking the unthinkable later. You may remember that we had a little drone event, and actually we were already short, and we got taken out of that high, and we got back short up top here after a little drone event involving that company Aramco. That Aramco company that seems so tied to the petrodollar, America, Saudi, the Saudi Arabian family and all of that. Anyway, we got back short, and I was short when we were there in Acapulco in February, and that's where we were talking. We were saying you're going to run, and you will actually take out our expectation, the previous low of the downside. You may in fact notice even in this video I'm illustrating a falling wedge with successive major oil capitulations over there, a little one here which is expected to have this rally, which we called on a grind line, a little bit of a rising wedge, with the actual real downside coming here that would take you through this level lows and run the previous lows. For both WTI and for Brent, they are different oils, do remember that. Anyway, so this particular video we've subsequently released. It was under quarantine for a while, kind of like the pandemic, because our event organizers had wanted to make recordings available of the event, so we complied with that. Anyway, so that's why it was only uploaded on the 30th of March, in case any of you were wondering. And the collapse came on the 7th of March, when you had a weekend, when it all came about. So let's show you the update on that. This was the original call. Now the thing is, lots of other people, Raul at Real Vision and other guys are now calling. I'll take it up to the monthly first, in fact, and we'll clear the lines. You can see that spiller, that thriller from Manila that properly spilled and took out the previous low. So that part of the prediction that we said was very high probability has now occurred. The pricing element for lower prices of oil, which could see extremes, which isn't necessarily high probability but was deemed virtually impossible, became a little more possible for the first time. But actually right now, the reason I'm doing this video is now all these people that are sometimes what I call late to the trade, and people that are late to the trade then make up for it by being more aggressive. So now we actually have a cacophony of single oil callers, and we've got all the worst news out there, that they're needing to store oil on tankers that aren't being used, to float out in sea, etc. Goldman Sachs said that the land extracted oil is going to have bigger problems because it's got to be transported. The cost of transport is almost more than the value of the oil, etc. While at least the Brent that's pulled out in the sea can be put in a tanker and floated until it's needed, etc. So there's a case maybe for why WTI might be weaker. It's also less good oil, let's not forget, needs more refining. But anyway, all of those things being around, I'm actually expecting now a small bottoming and a rally for the oil. Longer term, in actual fact, our commitment for our idea of what may happen is that we bounce along a little bit. It's not going to be a strong oil market, don't get me wrong. There's very little economic demand, and I'm sure all forms of gluts have formed. But at some point, at some stage, we'll get here, and we'll probably, that's the other side of the wedge that I'm drawing, and then we'll pull down, and then I expect we will break the wedge, and actually oil will become costly again. This was likely to be a very inflationary environment. Remember, this will be oil measured in dollars at that point in time, which will probably have $10 more trillion sloshing around and will be the equivalent of a single American cent when the dollar was originally issued. Because don't forget, it's lost 93% of its value. They're going to quickly get up to 99% of its value in no time, and the value of a single cent a dollar will become much of a muchness. So this overall falling wedge that we've drawn, I should do that in a different color. Let's take him away. Will look slightly different, and you will work your way to the other side. Now, is there still a possibility you hit the single digit oil? For me, now that this is in, I see it as less. Too many people have a day, as I was referring, forecasters that missed the actual break of oil when it was here and the massive $9 drop and then the follow through spill down to here, actually have, in my view, fallen a little bit asleep. And now they say single digit. They try to catch up with the game by making ever more aggressive, as if they were always there and they're coming on strong now. This is actually a worry for me because I've seen this many times in the forecasting community where people are scenario casting, and that's usually a sign of a bottom for me. And actually, when I look at it technically, let's take it into the technicals, actually I'm seeing evidence of exactly that, and why even, wait for it, judicious longs could actually pay you some money in oil. That's right. With all this terrible news, you just heard me right, you're more likely to make money on the long side, and I will show you why. A, you made the bottom of that wedge. B, you had a huge gap. So let's analyze the gap and the recent mark price dynamics a little closer, and you'll see a little bit about what we did. So the time to have been short was up top here in the 50s and 60s, as we were, and also to follow the drone pump and then sell back. That was a huge rejection there. You should have been short oil at 62s. You could have had US oil at 62s. You would have had Brent far higher. This was an absolute grind. This period here. Making it, seeing as it's grinder we're talking about, I may as well make it transgender pink. An absolute grind, and then they pumped that little price up that it couldn't hang on with that oil sell-off. Boom, that was it. You had a broadening pattern there, you had a rising wedge pattern there. Smart technical traders should have been long gone short before the gap. The gap is actually part and parcel of the beginning of the end. It's the high acceleration point for a major move to the downside. Anyway, the gap occurred, and then you got a grinding sell-off on oil. And in actual fact, as you'll probably be seeing shortly, that after this gap, a little bit of convexity, as we call it. You'll learn about our language. Just grab the links below. If you want to have a chat, how we read the markets, and how we are positioning, as I say, we are walking back from short positions, and I will show you that in actual fact I suspect that there will be some recovery short term. That doesn't mean when we hit Lehman's moment, reset again, that we won't have a spiller, an absolute thriller, take another tumble like a rumble in the jungle all the way to new lows. Absolutely, that can happen. I'm talking about short term, your day-to-day trading for now, over the hourly, 4-hourly, and even overnight trading for oil is now the time to be short if you remain short, if you're already short, or to be shorting. And my conclusion is actually no. Okay, so you had your convexity over here, you had your huge gap over there, you closed 50% thereof, and then you went into a convex spiller. You broadened, which warned us that you would go lower. You came back down, and then you've gone out. Now you might notice, if I take all the lines I've just put on off, that in fact I've drawn a falling wedge, and you can see that falling wedge in the gray lines here. And what typically happens is you make a bump out the falling wedge, you have a little return move, and then you pop. So let's go a little bit deeper into the time zone that's under review at the moment. So we're on the 2-hourly. We're looking at WTI, which according to Goldman Sachs will be the weaker and the more expensive to move around because it's coming out the ground and needs pipelines and needs to be shoved around in trucks and taken to where it's needed, etc., and stored in environments where there isn't easy storage, unlike ships that can float in the ocean. So here you have the convexity. Here's you have this falling wedge. Now this is what I'm highlighting to you. I'll make the lines a little fatter. And this is something you'll learn. We specialize on volatility constriction moves. And we also look for 3 specific impulses in the wedge because we know it's a related cousin. It's the quirky, slightly slightly special child version to an HVF. It's the kid with the squint relative to the more handsome HVF, Hunt Volatility Funnel. There's two impulses in that, 1, 2, and then you get really low volatility and a little third bump right now. And I would expect a little return move to the wedge, possible, a little bit of resistance, and then actually upside movements. So while all the others are cheering and patting themselves on the back for now calling all short and being the ones now saying single digit is definitely on and I can see it coming and all of that, they're probably going to walk into a rallying period. Now, as a falling wedge, do you have really tight targets? Do you have strong everything? No, but it points to marginally lower lows that were made here. Marginally lower lows, marginally lower lows. All the headlines are about new lows. This is designed to kill support and resistance traders. You sit there and you say, okay, if it goes lower than that, I'm shorting. And it comes over here and you come to that level and you get short, it rallies. You think you're right, it gets short, and then it rallies higher. And you're in this wedge, you've got this multiple contacts along the wedge surface here, multiple contacts, and now you've got a break. That points to a little bit of easing and then slowly base building and a bit of strength for now. So that doesn't mean all into a year from now, that when we have fear and loathing Mark 2 with our Lehman's moment, that oil won't eventually also be smacked down again and maybe make a new low. But be careful about all those that want to be firstest, loudest, throwing out the biggest number. Kind of like McAfee calling 1 million and other traders calling 100,000 on Bitcoin all the time. You get in the traditional markets our own version of that. So for me, the oil is hammering out lows on a falling wedge, making marginally lower lows. This actually shows that there is some buying. We can be conspiracy theorists and say it's, the government buying with QE to support the price. We can just say, hey, it's somebody participating in the market that is leading to the footprints in the sand, whether it's commercial or non-commercial minded or non-profit minded buying. The fact is it's being bought. They won't be able to do it forever because nobody's got bottomless amount of money to pour in forever. You might think the Fed does, but they'll have other things to worry about in time when it comes to their banks that will also be bottomless pits that need filling. So it doesn't really matter, but there is clearly a sign that it's making marginally lower lows after a real convex sell. Okay, so that's my update on it now. Oil is not the short trade you would imagine it to be right now, and in actual fact, maybe after a small dip lower, there could even be profits to had trading it on the long side. I'm not going to bother. I don't have enough to warrant a trade. I'll tell you what does warrant a trade. But I do have enough to know that I don't wish to be short anymore, and we are long done. I'll also point out we had inverted HVF, our most reliable, most accurate process that we trust to the highest level. That doesn't mean it's 100% and doesn't have failure rate, but it's very, very highly accurate. Details in the link below if you want to book a call. That gave us $3 for Plains All-American. That target has been met. That gave us the tallow target from £2 to literally 7 pence. That target has been met. Those equities have made their targets and have since had a little bit of a rally. In fact, I haven't looked at Plains since I sold all my put options and closed all my spread bets and CFDs. I wonder where it even stands nowadays. So it made our 3 targets and is in fact at 5. Now you might say that's not a lot. Actually, from 3 up to 5, it is 66%, my friend. That doesn't mean it's about a rocket. I'm not looking at that and saying buy. But what I am saying is it certainly made its low and its target. Wow, isn't that perfect? Wouldn't you like a method that does that? As I say, mini series below. Okay, that's my update on the oil from me, the Market Sniper. We look forward to servicing you further. You are getting this news after all our premium community people are getting my opinions, and as a result, your performance may not be as good. And I do not always have uptime or bandwidth to update Freeview. Again, that's the value of a premium community. But I thank you for watching. I thank you for sharing and liking, and we'll catch you on the other side in the future. Okay, all the best to you, and go and pop and watch our live stream that we did. It will be back up shortly. We just had to do a short edit, and it is about the benefits and the opportunities in both the lockdown, the current stage we're at, and the larger financial stage that I anticipate will follow in the great reset season. There are real scopes for you to make out like a bandit if you get prepared and you use your head, even if you have low cash resources. Okay, with that, I love you and leave you and say goodbye.